Welcome to the weekly markets update. I'm Maritza Garishvili, investment consultant at Kamak Retirement Group. Today we're recapping what moved the markets during the last week of February. The US equity markets delivered poor results last week, with Dow Jones Industrial Average down 1.7%, the S&P 500 down 2.4%, and tech-heavy Nasdaq index posting losses of 4.9%. While there is optimism regarding slowing COVID-19 cases and new vaccines rolling out, along with newly passed $1.9 trillion stimulus bill, the market continued to react to the looming fear of inflation spiking. Rising bond yields hurt the market's momentum last week, despite signs of improving economy. Fed's aggressive monetary policy and large amount of government spending has led to a bond sell-off, as expectation of rising inflation continues to increase. This puts investors in the mindset that Fed may also increase interest rates sooner than they had anticipated. The sudden spike in US Treasury rates on Thursday, which saw the yield on a 10-year note reaching 1.61% at one point, is being blamed on technical rather than fundamental reasons. The moves do not appear to have a steady footing, with a 10-year yield closing at 1.4% at the end of the week. The House passed the $1.9 trillion stimulus package on Friday, bringing $1,400 checks a step closer for most Americans. It does appear that one Democrat's policy goal of $15 minimum wage will not be a part of the plan. Friday's personal income data showed a surge of 10%, driven by stimulus checks, while spending rose 2.4% for the month. The Federal Reserve's preferred measure of inflation, known as core personal consumption expenditure, rose 1.9% year-over-year basis. With more stimulus on the way and continued good news on the rapid progress of vaccination, the market continues to worry that risk of overheating in the economy is high and inflation is going to accelerate faster than policymakers suggest. U.S. economy saw weekly jobless claims fall to 730,000 for the week ending February 20th, below than expectation. Continuing claims also fell by 101,000, bringing the total 4.42 million, the lowest this statistic has been since March 2020. However, these numbers are not fully reflective of those who were heavily impacted by huge winter storms that swept across the South, especially state of Texas. The CDC has signed up on adding Johnson & Johnson's newly authorized COVID-19 vaccine to the growing list of vaccines. This will be the first vaccine distributed that only requires a single dose shot approved by the FDA. The vaccine test results showed that it is only effective for 66%, preventing in moderate and severe COVID-19 cases. Tenants who are behind on their rent are still waiting for $25 billion in assistance that was announced in December 2020, as millions of households and landlords are falling into debt. Although no money has been distributed yet, Congress is looking to add additional $20 billion to rental assistance. Checks are expected to be given to the lowest income renters first and distributed accordingly afterwards. Thank you for watching. For questions, please visit our website, kamakretirement.com.